For Europe, I think the key challenges are that it's a very old industry. They've been producing biodiesel, they've been producing ethanol for 20 or 30 years, and you're now facing a situation which has become almost existential, in that those key feedstocks that have been powering a lot of used cooking oil based biodiesels are now starting to be pulled elsewhere. You start to see real strain on some of the supply chains, and the rise of the US has really started pulling a lot of the those key feedstocks away from the European sector. That's coming at a time when Europe itself is undergoing some very clear mandates, some very clear growth. There have been some very clear expectations set out by the European Union in what they're looking for in terms of the next iteration, the Fit for 55 rules that are coming through, which aim at getting Europe a 55% reduction by 2030 versus 1990 emissions levels, and that will be a key milestone, a key point along the road towards becoming carbon negative by 2050, which is the EU stated goal. So there's lots of mandates, there's lots of packages, there's lots of legislative initiatives that are coming down that are really starting to drive change. But at the same time, there's the experiences that the North American market is seeing as well are also being replicated in Europe too. You've got this transition from this legacy biodiesel markets towards these new HVOs, renewable diesel capacity, and then on to sustainable aviation fuels, the SAF markets that are coming next as well. So generally, the market has a lot of things to be positive about, but there is definitely some short-term pain as we negotiate this early stages of transition, and that is going to be key in determining how this sector emerges from this key portion. We've got new capacity coming online. We've got very clear mandates set out from the next from 2025 to 2030, 2035, 40, and on towards 2050. So it's going to be. The challenge is going to be seeing how those feedstock slates change as the market adapts to those new requirements. The role of China and used cooking oil imports has been key in helping Europe start to get through some of these transition. It's a massive feedstock. It has brought it has revolutionized, I think, the way that used cooking oil is being used in the European sector, and it is playing a major role. There are question marks, however. There have been question marks for a while. Europe has launched investigations, some of which have not gone anywhere. They've engaged with Chinese authorities. They've tried to understand a bit more about the dynamics around the Chinese export market. You are looking at a country that has 1.5 billion people living in it, so there should be a lot of used cooking oil that comes out of China, but it is hard to get the certification in it. So I think the challenges remain in how people are confident in whether those used cooking oil flows are really used cooking oil. The fear is that they're actually virgin vegetable oils or palm oils that are coming in, but I think the evidence to date suggests that is perhaps the exception rather than the rule. There seems to be a little bit more comfort around Chinese cooking oil flows. So yes, I do expect it to remain part of the European complexion. As part of the feedstock slate. I do think that there will be still little bumps along the way, but I think with these mandates, with these very clear pathway towards decarbonisation that Europe is embarking on, all of these feedstocks are going to have to play a role. If we're going to get anywhere near hitting some of those targets, all of these feedstocks will need to be employed. So I don't see how Europe reaches those targets without making some of those, without having these flows coming into the to the region. I think reaching the middle of 2024, it's a good time to take a check on progress to date and really look at where we're at. And I think the silver linings, the green lights are that there is new capacity coming online, there is investment that is going into this sector. We are starting to see steel in the ground and companies setting out very clear plans. One or two big European oil majors or companies that have been exclusively oil-based energy providers are setting out a stall to transition completely to becoming biofuel players entirely. So we've got some Spanish players doing that. Neste is committing itself to moving away from its oil legacies. Repsol and Cepsa have also made significant moves. Eni in the Italian marketplace is also investing heavily. Total has a big facility in southern France. There will be more that comes out of that, and I think you can see the benefit that the mandates have that bring the certainty, I guess. The question marks still remain is how's the best way of fully realising some of those goals and targets. Mandates are, they punish those who fail to hit those targets, and there are question marks when you're looking at some very ambitious sustainable aviation fuel targets. There are question marks on who will have to pay the cost for not meeting those targets. Airlines, I suspect, will be in the firing line on that front, but they are already facing very stiff competition, very strict cost pressures on their operations. So adding in a punishment for failing to meet blending mandates when they're not producing biofuels themselves it feels a little bit harsh. There are still some areas that need to be sorted out, but ultimately at this point there still isn't enough sustainable aviation fuel coming into the marketplace to meet some of the targets that are out there. We're looking at a 2% target by 2025. We're roughly at 0.05% at the moment, so that in itself is the first big step. By 2030 it rises again, and it continues rising every 5 years until you get to 70% by 2050, and that is a huge figure. And then on top of that, you've got all of the other roles that are moving around in this space as well. We've started to see ethanol being mentioned within that SAF context as well. Clearly the ethanol sector is very keen to move into this space, and this would be potentially a huge market for them to get into as well. But ultimately, if the growth is achieved on the scale that is expected to be achieved, then there should be opportunities for everyone within this space. And that's the key. I think the key area is at what point some of the more fancy alternative fuels such as hydrogen start to take on play a bigger role in this transition, and at what point the biodiesel space, which is the solutions that are available now, at what point they start to lose market share perhaps to some of these other more exotic means of decarbonising. So that's, I think, the key. From the middle of 2024, we clearly have some very big opportunities around conventional liquid biofuels, around some of these more new generation of HVOs or renewable diesels, and then on into sustainable aviation fuels. In conclusion, in the middle of 2024, we're in a relatively strong position in terms of investment, in terms of some of the goals and the mandates and the targets, but there is some short-term pain to be negotiated. So we'll see how many of these projects actually come to fruition by the end of this year, perhaps beginning of early next year.